Hello there and welcome to a little tutorial video on the multi-time frame opening range indicator. This is a opening range indicator that has a separate 1-minute bar series running in the background, making sure that you have the correct opening range no matter what type of primary bar you're using. So for tick, range, and volume charts, that's important. Because those bars might close after the opening range period that you intend to display. And so I'll just show some of the main features of this indicator here and explain a little bit how to use it. So what we have here is opening range period of 15 minutes here displaying on the NASDAQ in a 5-minute chart. And we have a red area here as well. That is the 1-minute opening range or the price action that occurs in the first minute. We have the regular open displaying here. We also have the pre-session range in the gray here. So if you go a little bit further back here, we see that the pre-session started off all the way down here, and then in the Asian and European session, moving upward steadily, and then the regular open here just below the pre-session high, and that level being tested here. And then once this opening range bar completed, we see a continuing move to the upside here. And so what I'll do first here is perhaps just have a look at how to display the opening range and explain a little bit of about the different options that you have available here. So we have a look at the indicator dialog box here. You see here it has the regular hours as the opening range session. You can also set it to extended trading hours. That will then be the opening of the pre-session. So if we apply that, you see here that now we simply have here the open of the pre-session. And so in order to display the cash open or the regular open here, you need to set it here. The regular trading hours, moreover, are defined here to the very bottom here. We have show trading hours activated here. And so for the CME equity index futures, we have the NQ added here, and all of the major exchanges and futures contracts are implemented in this indicator to make sure that you always have the correct open and close times and the different session times added to this, so you don't have to worry about session templates as long as you use here the instrument default settings. So that's the session templates that you should use. Use instrument settings, and then you will have the correct open and close times of the session, which is of course important if we're talking about the opening range. And we'll have a look here now at the custom hours, which you can also use. This is something that I use, for example, for the euros. Again, we're referring to exchange time here. So I just always use exchange time because I use this instrument default setting template from the data series. And if you choose a custom hours here, you will have to specify the opening time. So for the custom hours that I usually use for the euro, for example, is the end of the Asian session. And so I choose here a 4-hour window. And of course, if you're looking at the crude, for example, that will be different because that's based in New York. The E-mini futures and the euro are based on CME time in Chicago. So move that back or forwards depending on the instrument that you're trading. And then I don't need to have the pre-session showing here for that type of setup. So I turn those off. And let's see how this looks. And so here we have the opening range period starting here at the end of the session, Asian session, and moving into the open of the European session. And so this is also a interesting breakout scenario to pay attention to. And as you see here, these extension bands work quite well for target definition. But we can move back here to the regular trading hours and talk a little bit more about that. Then you need to reset this to 15 minutes. And I wanted to show you here the range band extensions. As you see here now, we have the opening range as a basis for that. You can do so. Here we have the extension bands of the 15-minute opening range of the regular period, of the regular open. And you can also change this to the pre-session range. So if we activate that again, we'll see where that comes from. And so we had a pretty big pre-session range here, but these extension levels also work quite well as target definition. So we see the 50% extension level being hit here. You can also choose to eliminate some of these extension bands if you don't want to see all of them. For example, we can eliminate the 50% and the 300 and say we just want to show the 100 and the 200. And then you have those levels displaying like this. If you want more than the 4 levels that are available here, you can just add a second instance of the opening range indicator and then add the additional levels here. So I think that's for the main functions of the multi-time frame opening range indicator. Now I will quickly show you how to use this with Bloodhound. You see also some paint bars here. That is the Ichimoku indicator that I have in the background to indicate a trend and momentum bias. So we can show also how to implement that in a very simple example of a opening range breakout strategy. So here we have Bloodhound added, and we use the indicator comparison. So basically what we want to do here, just to start off, is to compare price with the opening range high and low levels. So you choose price here, and just stay with close for this one, and then grab the premium opening range indicator here from the Lizard Trader folder. That is the area to find our premium indicators, and you see the opening range here. We choose the opening range high and low, and then you will see here the opening range period is by default set to 15. If you are working with a custom session start, you will have to specify that here, and you will have to also indicate the session type here. Of course, now in this example, we're using the regular trading hours, so we'll just leave that as it is. Up here, you also have the extension bands if you're looking to define target and exit conditions. And then basically we want to enter a trade if we have a close that is below the opening range high. We want to enter, for example, with a stop order here a few ticks above the opening range high. When that is broken, we want to be in the market. So we need to specify that the close needs to be below the opening range high and above the opening range low for shorts. And we can also add here that the close for long setups should be above the opening range midline, and conversely for shorts. So we can just copy this here and then rename it to reference the opening range midline. And then I grab that data series here, or plot rather. And then for long, we want the close to be above the midline. And for shorts, it needs to be below the midline. And then we can add here the Ichimoku as a trend definition. Ichimoku, I'm going to use the premium version here, as it has a data series for the composite trend. So the composite trend is located here. Fixed value comparison and positive for long and negative for short. Make sure to name this solver Ichimoku composite trend. Okay, so we'll create a new logic for this. Add the solvers that we just created. And see what this brings. And here we have a signal. Once the close is above the midline, and we have a positive or a long Ichimoku bias. The close is below the opening range high, also on the second bar here. And so once this breaks out of this range, we will be in a long trade. Another example here. Again, a 15-minute opening range with a close above the midline, but below the opening range high, with a positive Ichimoku trend. Here we have a failed breakout, but the conditions are valid, as you see here. We have a opening range, a close below the opening range mid and above the opening range low. And so we have this short output here. What we see here is a breakout that did not fire here because we had a neutral Ichimoku trend, and then we are dipping back in here on 2 instances, and that's sort of not what we're looking for in terms of price movement. So we can improve on this logic to eliminate these missed breakout opportunities that they're firing when they're coming back into, retracing back into the opening range by simply here adding a slope condition. So let's use a indicator slope solver. We can just use the SMA, modify this here, set that to 3. And pretty sure if we add this to the logic here, we'll be able to eliminate these situations here. Yeah, it looks like this one is still valid. We'll have a look at here, adding the SMA to the chart. And making it a little bit more visible. This goldenrod is really not very helpful in showing on the chart. So we see here that this is in fact on this bar sloping up still. So in that sense, a valid signal. We can of course also apply the same logic to this as to this price versus opening range. So we can just copy these two and apply it to the SMA 3, and then say SMA 3 needs to be below the opening range high for long signals, and vice versa for shorts. So we'll go in here and make the same adjustment to the SMA period. And do the same here for the midline. And add these to this AND node. And so now in this example, we have eliminated this this signal here. All right, so I think that is it for the tutorial that I had for today. Hope this has been of value to you. If you have any questions, feel free to reach out, info@lizardindicators.com. Otherwise, drop me a line at the contact form at lizardindicators.com. Looking forward to hear from you sometime soon. In the meantime, take care and bye-bye.